Hey everybody, welcome back to Layman Loans. In this video, we're going to see what is a cash flow. Cash flow is the liquid income, what is generated from your business or your different sources of income, which you get on a month-on-month basis. All right. So if you're getting a business only on a seasonal basis, like you do a cracker business only during Diwali, or you try to do Black Friday sale only during Christmas or during November, December times, then that is also going to generate uh, like sufficient revenue for you, but that cannot be considered as a cash flow generating business. Banks love periodic cash flow. So you need to get a monthly recurring revenue on a periodic basis, whether it could be a weekly, monthly, yearly, but whatever it is, that should be a recurring cash flow which is coming to your account. Only that is considered to be a credible source of income for the banks to be convinced to lend loans to you. So, what are cash flow generating assets and how can you own many such cash flow generating assets? Okay, so let us see one by one. The age old cash flow generating asset since immemorial times has always been real estate. People have always rented out their homes or commercial spaces, office spaces, and got rents from their tenants. So that is one of the most coolest cash flow generating asset. When you make any particular work or you try to make a product or service and then try to get a revenue out of it, then there is always a recurring work to be done or a recurring effort to be put in order to actually get an income. But in the case of a rental income, once you build a home, there is going to be a tenant who is going to come and stay, and there's going to be very small amount of expense in order to maintain the asset. Predominantly, it's going to be a yearly maintenance or a like half yearly maintenance, but typically you will be getting your rental income on a monthly basis. Say assume you have a marriage hall or a convention hall in your name. So for every day there is an event, you're going to get a daily rent for that. It could be 30,000, 50,000, any amount based on the size of the hall, but you'll be getting a rent for that as well. If you're going to have, say, a salon space and you are not the actual stylist up there, you have a set of stylists, you have all the things in place, and every day you open the shop, daily you generate, say, about 50,000 or 30,000 rupees in total revenue, and after all expenses you make about 10 to 15,000 rupees per day, then that is a cash flow generating asset. Anything which is not going to be a very capital intensive expense for you, it is always going to give you a lot of cash flow to your account without much of an effort, and it is all systemized in such a way that it doesn't require your lot of attention or care, but it is mostly driven by systems, then they are all considered to be cash flow generating assets. It can be a YouTube channel, it can be a book what you have written, it can even be something which like a royalty. You patented a technology and you're getting royalty out of it. All these are assets, and you get to get a lot of cash flow from these assets in terms of rents, royalties, payments, or revenues through all these assets. Banks love such assets. Any asset which is always putting money to your pocket, which is always feeding your account with consistent source of income, then banks are always interested to account that as part of your total income. When banks know that you have sufficient source of income in order to meet your EMIs, then you are automatically qualified and eligible to get loans. Why do you first of all get loans? You get loans in order to enhance your position and improve your cash flow. Any loan what you get should fundamentally be with the intention of improving your cash flow. Because if you're trying to get a home and you just try to build a house, take a loan and build a house and live on it, it is not actually going to give you any cash flow. So possibly let us assume that you've been living in a rental home and you've been paying 10 to 15,000 rupees. Now you are trying to get a home loan for 1 crore and you build a house and live up there, and you're paying 1 lakh in EMI every month. What is the cash flow you've generated? Literally nothing. In fact, the only savings what you've got is the 15,000 rupees rental savings what you've got. That is all you've made. But 85,000 rupees is actually going from your pocket. So your home can never be qualified as a cash flow generating asset. But there are new modern ways in which people are becoming really creative in order to generate a lot of cash flow. One such way nowadays is something like Zoom car, wherein you have a car, you're just renting it out, and you are not even going near the car. You just know that there's a booking which has come. You just park it in your parking lot, and people come, take the car for a specific number of hours. They pay the amount directly to Zoom, and Zoom will pay you back. And your car is being occupied by people, like multiple tenants come and use your car and keep paying rents. So one car is rented at minimum 1,500 to 2,000 rupees, and it goes even up to 6 to 7,000 rupees per day. And throughout the month, if you see, you're getting a sizable amount of 50 to 60,000 or even up to 1 lakh only by renting out your car. And that becomes a very, very useful cash flow generating asset. Once car was always a luxury. Now car has become an asset, right? How it has become an asset is purely because it is able to generate revenue for you. And if you see the new age Airbnbs, allow you to rent out your home. So assume you live in a 3 BHK house or a 4 BHK house. You can actually rent another 2 bedrooms or 3 bedrooms what you have, the additional bedrooms, and you can be a host. So you need not actually buy properties in order to rent out your apartment. You can just rent out a single room or a single cot and still collect rent on per day basis and generate a lot of cash flow. There are sufficient number of ways in which you will be able to generate more revenue and cash flow for yourself. The higher the cash flow you generate, the higher will be your credibility with the bank. All right. And any cash flow what you generate should be consistent. So today, once in a blue moon, you just generated some 10,000 rupees, and then next 2 years there has never been an additional penny put onto that because of that cash flow generating asset, then that cannot really be considered as a stable asset. Banks will never leverage that. So assume you got a contract from a customer and you just completed the contract. That's a job work. After 1 month you got the payment. Then there is no recurring payments. There is no further work at all. Then that is not considered to be a cash flow generating asset at all. But instead you have small assets which is always generating some additional income on a monthly basis or on a regular basis. It can be daily, monthly or weekly. Then that is definitely considered to be cash flow. Banks love cash flow, and that is going to always support you, and it will make you project to the bank that you have sufficient repayment capacity in order to meet up your loans. I hope this video is useful to you all, and if you need assistance in order to generate more cash flow generating assets from your existing assets, our team of experts will be always there to assist you. How you can reach out to us is very simple. Please fill up the form mentioned in the description and the comments below, and we'll be there to assist you. Thank you so much for watching this video. Looking forward to connect with you all in the next one.